what you've got today are two of the specialist team at Centurion. We are a specialist team. We're part of the Zenadin Group, which is a top 20 accountancy firm, but we're a specialist team within that, concentrating on indirect tax. Mike is an environmental tax specialist, although a VAT person as well, and I'm one of the directors here. So welcome. We wanted to put this on really because we're seeing quite a lot of activity across our client base, which covers housing associations, charities, universities, a broad range of corporate and commercial providers. And there's been a continuing theme of issues post the unfortunate tragedy around Grenfell in terms of insulation, but we're seeing a lot of activity on external wall and retrofit as well. So, as I say, I'm Liz, Welsh female, can talk for Britain, and I'm a farmer's daughter as well as a West Ham supporter. So I, don't know which day to turn really. Mike, do you want to say a quick hello?
Yeah, hi everyone. Yes, I've worked in kind of environmental taxes and VAT for a long time, and was first involved with environmental taxes when I was actually in industry with a multi-utility that at the time when all these environmental taxes kind of took off. So the kind of energy taxes, carbon taxes, landfill, resource taxes like aggregates levy and so on. So that's stayed with me since then. And by the look of what's going on in the future, there's every reason to think that there'll be a burgeoning breadth of indirect environmental taxes and concerns coming up in the future as well. So yes, my involvement with Centurion is, in addition to the kind of sectors that Liz mentioned, is also utilities, heavy industry, and anyone who basically spends a lot or incurs a lot of energy or costs which relate to their environmental objectives. So here we are, probably at the start of a journey which is going to last for some time, till 2030 at least. Yeah.
Now, Mike and I are going to pop back in terms of chit chat, but in terms of the wider environmental context, Mike's going to sort of set the scene for us first. So I'll hand back to you on this one, Mike.
Okay. Yeah, thanks. So how did we get here? I mean, I guess we're all pretty familiar with the targets for reducing emissions in order to meet targets for temperature increase. And there are various ways of cutting that. The one most used currently is to reduce or to minimize temperature increase to 1.5 degrees C by 2030. Whether we're going to meet that is a big question now. That was the COP26, or was endorsed in the COP26 meeting in Glasgow recently, but it was actually set back in Paris in 2015 as being a target that they thought it's a bit of a compromise then whether everyone was going to actually meet it, but that was the only figure that people would generally sign up to. Kyoto was the first meeting, conference of the parties, which really set the scene for reducing emissions 30 years ago. And a statistic which I find quite alarming is that in those 30 years since Kyoto, global emissions have actually continued to rise. There has been no reduction, apart from a tiny blip during COVID, during lockdown. There's been no reduction in the steady increase in emissions globally. So, in the context of that, when you look at buildings and the built environment, which is basically, I guess, where many of you are, there is clearly a fairly healthy, unhealthy contribution to emissions made by buildings and the built environment. And in Wales, reduction in emissions from the built environment make up quite a substantial part of our target. Most of those emissions are around kind of indirect activities. Energy consumption in particular forms a big part of that. And in that context, it's not surprising that there is a drive to improve generation, and to make that generation renewables, and of course things like insulation to make the most of what energy we are generating has become primary importance. Transport too makes up a massive part of the emissions formula. So we can look forward to maybe substantial investment going forward into public and mass transport systems, and of course EVs. And finally, adaptation and resilience, which is a term which has become more and more prevalent. And I have to say, when I first started hearing people talk about adaptation to climate change, I felt a little bit disheartened, because when you start focusing on adaptation, you're basically saying, well, we're going to almost give up on reducing emissions. We're just going to try and live with it. And in fact, that's not the case. You have to do both. And I think it was the 2 weeks ago, I think the EA, the Environment Agency, did report to the UK government to say, look, we are nowhere near investing enough to manage what we have to do to adapt to climate change going forward. And every year we see all sorts of damages and so on being done because of environmental issues. So yes, so here we are. We're anticipating, in order to resolve this, it's going to be very expensive. Combating climate change and adapting to it is going to be very, very expensive. And there are lots of academics and economists out there who are banging that drum all the time against government bodies who are trying, I suspect, to downplay just how expensive it's going to be. It's going to be expensive. It's going to take government investment to make it work. And a lot of that is going to be in the built environment.
Yeah. And where we wanted to concentrate, because this is echoing the themes that we're seeing across our client base, is in terms of 4 core areas, really: generation, insulation, the point Mike's already made on how we adapt and become more resilient. And then there's a general sort of mop-up bit in terms of other matters. And speaking as an electric car owner, those things that we all take on as little steps to help in this. These are the things that businesses and organizations are coming up as basic challenges. And we're concentrating on this, I say, primarily from the VAT and indirect tax perspective of environmental charges. So what we're trying to draw out is a better understanding when you are out there planning projects, and whether that's I can see people who are from councils, people are from the NHS, people are from quantity surveyors and design teams. This is all about planning ahead and identifying where the VAT costs are going to come into the equation, where you can look at VAT savings within the legislation that currently exists. And we've just had a spring statement, which has created some sort of change there. But it's also, from Mike's perspective around environmental taxes, looking at those pressure points as well. Where can you plan for? Where are there reliefs that you can take advantage of, whether that's in climate change or aggregates levy? So that's the sort of context that we're sort of running through in terms of this very short session, which, as I say, will finish at 1, with hopefully some time for questions. Now, we've taken each of these by different types of project, as it were, in order to try and focus the mind for everybody. So I'm just going to speak to a couple of the VAT issues, and then Mike will lead into the aggregates and the other side on the environmental tax. So, for example, we've put up, a slide about generation. Well, okay, energy generation. Well, that's obviously clearly a business activity in terms of the output from that activity. It's generating income from selling energy, and that's going to fall into the realms of VAT. So what about the cost side of it? So the basic rule that we always follow on VAT is, obviously, once you're VAT registered, you're a business. If you account for VAT on your income, or you make 0 rated types of income streams, that will unlock VAT recovery on your costs. VAT recovery is obviously a great benefit because it reduces your costs by potentially 20%. Some of you listening will be in VAT sensitive areas, NHS, for example, universities, colleges, housing associations are on the call. You will not be able to recover all your VAT. So what's important to you is not just to recognise when you'll be charged VAT at 20%, but also to look for those areas where you can get a lower rate of VAT applying on those supply and installation or build projects. And there are certain areas where we'll be looking at 5% VAT rates, and hopefully there might even be areas when we can look at the 0 VAT percentage rate to apply to those costs. So that's really important, and particularly in government departments as well. You know, the NHS is regarded as a government department. It hasn't got carte blanche to recover all the VAT it incurs. Now that's very different from a local authority that can effectively recover all the VAT it pays out. So we've got to, when you're dealing as a client handler with these different types of clients, you've got to keep your mind open to the fact that they will have different VAT pressure points in terms of both the project, but on their own inherent ability to recover VAT. So please, on the VAT context, barrages and lagoons are coming back into the conversation more. We won't get into the politics of what's happened in the past, but it's certainly clear that there's an engagement in terms of talking about barrages and lagoons. Now, there's no general VAT relief on the costs relating to building a barrage. So that's where we've got to concentrate on understanding, well, what's the nature of the income generation? Is it going to unlock VAT recovery? Obviously, these projects have got huge leading times. So we're looking at, if we're dealing with a new client, their VAT registration position, timing the VAT recovery to improve their cash flow. I'm also starting to see discussions around consortium arrangements, and I'll be interested in seeing how the City Deal project, which relates to the acquisition of Aberthaw, turns out. You know, an engagement of a local authority in perhaps areas of generating income, perhaps not necessarily a lagoon at this stage, but it's not beyond the realms of possibility that the public sector bodies will get engaged in these projects. And as I say, remember, we've got this issue as to VAT rules being very different depending on which organisation we're talking about. The MIMS pit that I've just put up there is a new model that we're starting to see. It sort of replaces the PFI projects, public finance, private finance projects that you would have seen back in the sort of 80s and 90s. And it's a mutual investment model. And we are starting to see those here in Wales. And again, they can have the potential to be quite complex in terms of the structure that's going to be developed in order to deliver these projects. And the final point we just put on there is in terms of government grant. You know, money that comes to you or to an organisation in terms of funding its activity. We have a couple of issues sometimes with grants, because we need to make sure that the grant is going to fund the full cost, including any irrecoverable VAT. So we need to make sure that that bid includes the irrecoverable VAT. And often, particularly in Welsh Government, I have a fair range of discussions with some of my client bases on terms of, well, Welsh Government are saying they're not funding the VAT. Well, what do they actually mean by that? And it's a discussion that's important to have very early in the conversation. So as I say, nothing general in terms of VAT reliefs and specifics. These types of generation schemes around barrages and lagoons are all about the normal business rules and how you set up the structure in order to deliver that effectively. But Mike, you've got a range of other points to bring to the table on this.
Yeah, I mean, aggregates levy being the first one. Now, aggregates levy, pretty obscure tax. You may not have come across it. Many businesses won't, but it's the kind of tax which, if people are affected by it, they're usually affected in a big way. Briefly, it's a tax on virgin aggregate at £2 a tonne, and it kicks in where anybody commercially exploits that aggregate material. And commercial exploitation means if somebody removes the aggregate from its originating site, mixes it with something other than water, so including concrete, obviously, or cement, or uses it in any way for construction purposes. And as I say, when it does kick in, it can be very expensive. I can probably illustrate that with maybe a case that I dealt with, which, without mentioning names, was a very substantial port development on the south coast, where they needed or wanted to expand the port, to build new kind of boundaries and fill in those boundaries to make for new docks and new quays. And when you do that on the coast, what you need to do first of all is build a wall, and then fill maybe 9 or 10 or 15 meters behind that wall with aggregate material, which they sourced, as many would, from out at sea, from sandbanks out at sea, and then ship it back in. Now, at the start of that, the volumes of the material they were looking at suggested an aggregate levy liability of between 19 and 20 million pounds, in addition to the development costs. So what had to be done, what I did was to look at the precise use of all of that material. Now you could say, and HMRC's initial view was to say, well, you're using all of that to build a dock, using all of it for construction purpose. It's all taxable, pays the money. But in fact, by looking at the detail of it, there are other arguments to be brought to bear to say, well, look, actually, we're reclaiming land to a certain extent. And also some of this material is being used in such a way that it doesn't have a construction purpose. It's purely filling in a hole, filling in a void. So it got quite complicated, but in the end, I mean, we ended up, I think, with a liability of more like 7 million rather than 19 million. But it illustrates the point that, and the similar thing could be applied to kind of coastal erosion plans and so on. But with barrages and lagoons, clearly there's a lot of offshore and onshore development, and that will require a lot of aggregate sand, which is an aggregate. So potentially you're looking at a lot of tax at the start, which needs to be worked out and minimised if possible, perfectly legitimately, but minimised. Climate change levy, carbon tax. It's a single stage tax on the supply of energy, gas, coal, electricity. Now you would think that to support the development of renewable source generation like at barrages and lagoons, there would be some incentive for that, but there isn't. Back in the day, pre-2015, renewable source energy benefited from exemption from climate change levy, but on the basis of market forces settling prices, which didn't seem to recognise CCL exemption, the government removed that exemption. So there's no beneficial kind of CCL treatment of renewable source energy, whether it's from lagoons or barrages or any of the other renewable source that we'll look at later on. So yes, including combined heat and power, Liz.
Yeah. This is something that we see a fair bit in our education providers. And I've also seen them in the NHS, I should add, as well, in terms of where you're looking at energy efficiencies within the organisation. So what we're trying to do as we go through these slides is touch on the broad range of projects where all these core fundamentals of VAT and the environmental taxes will pitch in, and there'll be slightly different perspectives on each of them. Now, in terms of combined heat and power units and energy companies going into our university clients, then obviously we're looking at, again, a business activity, the nature of the income that is going to be generated from that. And if it's within an internal organisation, it might be all for internal use. But if there is any surplus that's being created, then we're talking about the liability of the supplies going out back into the grid or to other commercial providers, perhaps industrial estates nearby, perhaps even housing nearby. So we just need to understand the liability of that income. And for that purposes, in general, that energy will be subject to the 20% VAT rate unless it falls into what we call qualifying areas in terms of the value of the supply of electricity or fuel that's being provided. So there is both a 5% rate and a 20% rate in here. Now, in terms of direct supplies, as I say, to consumers, that's where we might be looking at private individuals, qualifying for the 5% rate, and it's getting those liabilities treated correctly. All of those are good for us in terms of creating taxable income that unlocks VAT recovery. Now, clearly, if we're talking about a university, they might be producing energy for their own internal use. Now, universities are a good example of a body that's heavily restricted in terms of the VAT it can recover on its costs. So when you're planning a project or looking at delivering a project into the university sector, it's really important to understand, okay, 20% VAT on the design, supply, build of these projects. How much of that VAT is actually going to be recoverable by that entity? Because that's going to sit as their total cost ledger then. It's a cost to their project. So in terms of business planning and viability, these factors need to be taken into account. And also in terms of generation in-house, when I'm looking at our housing association client base, we might be talking about combined heat and power. We might also go on to talk about solar panels on roofs, but the issue is always the same. What is that supply that you're incurring those costs? What is it going to be used for? And if it's provided free to a tenant, well, okay, those VAT costs, what does it relate to? Well, the argument must be it relates to the supply of that social housing, which for VAT purposes generates exempt income. And that exempt income means that for VAT purposes, any VAT recovery is blocked from recovery. And that makes housing associations very sensitive to looking for areas where we can reduce the VAT rate that's being charged on that supply and installation of energy saving materials or combined heat and power. What can we do to reduce the VAT that's going to be incurred if we can't find ways to recover it? So Mike, in terms of this particular, in terms of generating combined heat and power from an internal source, your additional points cover these two common things, but you've added in landfill tax as well here.
Yes, yeah. Well, I mean, there's CCL there is a correlation between CCL and VAT. Just to recap CCL again briefly, it's a tax on the supply, the final stage of a supply of energy to the person who consumes or burns it. So it's typically utilities, retailers of energy that are registered and have to account for it. But if someone builds a CHP and is supplying the energy from that to themselves as a self-supply or to somebody else who's going to consume it, then they may well find themselves having to account for what's called the main rate of CCL. Except if the customer they're supplying it to, if that supply qualifies for the 5% reduced rate that Liz was just mentioning, that also means that there is no CCL. It's exempt from CCL. So there's a double benefit, if you like, in maximising the 5% VAT rate. You also get the benefit of exemption from CCL. The other rate, so there's two rates of CCL. The other rate is what's called the carbon price support rate of CCL. CCL is one of the more complicated of these taxes. But the carbon price support rate applies to fossil fuel, which is used to generate. Okay, so you've got the main rate of CCL, which applies to a downstream supply of energy to someone who's going to consume it. And the CPS rate is CCL chargeable on the input fuel for someone who's generating. So gas and coal, they have to account for this duty on the input. So yeah, it's a little more complicated, but when it comes to CHPs, it gets even more complicated because the historic blanket exemption for good quality CHPs has gone. And whilst there is exemption from CCL for both input energy and output energy, that exemption is restricted to certain circumstances, being, first of all, that the CHP has to qualify as good quality under a government recognised scheme, the CHP QA scheme. And secondly, that the supply has to either go direct to a consumer or be used themselves, used by the generator. Where that happens, exemption is available. If CHP energy is generated and is supplied through the grid or through a utility, I'm afraid there is no exemption. It's subject to CCL when it's supplied by that utility, so there's no benefit there. So I guess the root message here is that CHP is very common. There's lots of people doing it. It's been around for a while as a technology, but increasingly there are benefits to investing in it for yourselves. But getting that right, getting a quality certificate in place and making sure that you understand, or people understand, what's happening to that energy can make a big difference between getting the CCL exemption or not, and indeed getting 5% VAT or not. Landfill tax, briefly, can kick in here in quite a nasty way. Landfill tax, a tax on materials sent as waste to a landfill site and is charged by the landfill operator. Anyone who generates electricity will have waste arising from that, and typically with CHP and other forms of incineration type generation, there'll be various forms of nasty ash, which typically has to go to landfill. Now, again, this might seem a bit obscure, but another true story, if you like, where a client was generating using its own waste. It was a utility, water and sewage company, waste handler, and very, very useful to generate lots of energy, lots of savings by generating from this material. But the residue of what they burnt ended up going to landfill. Two kinds of waste particularly arises from that. Fly ash, which is, as the name kind of explains, is the ash from the generation which is caught in the air, and bottom ash, which is the ash which falls to the bottom of the incineration process. Both make up the same stuff. Both are essentially the same chemicals. That's sent to landfill, and it's sent along with a waste transfer note, an official government kind of required document specifying what the material is. Now, the landfill tax difference is that the fly ash is subject to landfill tax at a higher rate, at 90 odd pounds, and the bottom ash at the lower rate of, like at the time, £2.50. A mistake was made, wrong code put in the note, went to the landfill site with the lowest rate, when in fact it should be subject to the highest one. So the liability difference there was £7.5 million, for which the incinerator, the CHP generator, was held to account. So, reiterating what I said before, I guess these might be obscure taxes, but when they bite, they kind of come at you from behind, and they can be quite expensive.
Mm. So what we're trying to add to the equation is to say not just the aspects of, as we've got the heading, indirect tax agenda. What are the indirect taxes that need to be on your agenda in terms of planning and putting in place schemes? But then there's also this issue of monitoring and controlling it and making sure that the VAT and environmental taxes accounting is done correctly. And that's about process. So that's probably more for the people who are listening, who are actually, responsible for the operation of a model, rather than the designers or the development teams that are saying, no, my job is to put this in. For our clients, it's also, okay, the estates team, the development team have put this in place, but somebody's got to manage this going forward and make sure these accuracies are maintained in terms of VAT and environmental tax accounting.
Yeah, so, the interesting point there, Liz, sorry to cut in, is that it's a mistake now to think that this is a tax, so therefore we only have one government department to worry about. The landfill tax, for instance, is devolved. So it's devolved to the Welsh Revenue Agency to look after. It's devolved to Scotland as well. And in both cases, the actual tax is managed as much, if not more so now, the compliance of these taxes, of landfill tax, by, in Wales, the NRW, in Scotland, SEPA. So many of these issues are being discovered, if you like, through the involvement of environment agencies, NRW, the EA, SEPA, not just HMRC. And there are numerous examples now over the last few years where visits, if you like, are conducted jointly by Environment Agency NRW officers and HMRC environmental tax officers. So it may be that these issues never come to light or never pass across the desk of someone in finance who might be thinking tax, but they may well go past an environmental manager's desk, or a designer, or an architect, or someone involved with the engineering of something. And given that the taxes are administered by multi departments, I'm afraid it does mean that the taxpayers have to look at multi-departmental ways of managing exposure to these taxes as well.
Yeah. Now, there was a bit of good news in the spring statement last week, and we'll touch on this in more detail when we talk about insulation. But those of you who've been sort of following the progress of wind and water turbines will know that in terms of VAT legislation, they were taken out of the equation back in October 2019. And you might have heard the Chancellor, in talking about it, link this to the departure from the European Union, because there certainly were challenges that the UK were facing as to what could or couldn't be covered under VAT legislation whilst we were in the single market. Now, with the exception of Northern Ireland, which for VAT purposes and supplies of goods remains in the single market, the rest of the UK, so that's England, Scotland and Wales, now have this ability to be able to vary UK VAT legislation to include things that wouldn't have been able to include before because they run counter to European legislation. We haven't seen a great deal of change in this area yet, but the budget that's been announced was one example of where it was cited as an ability that the Chancellor now had. So with effect from the 1st of April, the provision of wind turbines and water turbines fall back into the list of qualifying materials. And that in itself is just a point to note. When we're talking about VAT release for energy saving materials, it's not every piece of energy saving material that you might think of. For example, it does seem odd to me that double glazing isn't included in energy saving works. So there are quite a specific list of things that are covered by this. And again, when we're talking about the VAT reliefs to it, we've got to be really clear that we're talking about supply and installation. So we're not talking about supply only of these materials. We're talking about the reduced rate and the zero rate coming to play in terms of supply and installation. Now, in terms of solar, wind and hydropower, we've also got issues from the VAT perspective as to, well, actually, where is this supply happening? Because believe it or not, there is a definition of what the UK is for VAT purposes. So obviously it's the mainland, but it's also 12 miles off the coast. And when we're talking about the place of supply, the reason that's important to us in a VAT context is because it's identifying which country has that revenue generating capacity under its control. Where is the place of that supply happening? So if it's happening here in the UK, it's under UK tax legislation. And equally, if it's a supply that's deemed to happen here, but it's being exported, we get clearer guidance as to, well, when is it an export? So the sea base is effectively part of UK land, and we can have conversations about other aspects of VAT and property in terms of options to tax, etc. But it's important to recognise that 12-mile territorial limit in terms of making sure that's understood when you're planning your transactions. In terms of the VAT issues around energy generation from any of these sources, then again, we're looking at, well, is it supplied to commercial providers? Is it supplied to residential providers? But we're also looking at the nature of the tariff support. So there will be a generation tariff that organisations will benefit from. They will be paid that amount of money, and then there will be the export tariff. Now, the difference between the two It's effectively saying the export tariff is what you're being paid for the energy you've created. So that for that purposes, there's a business element of the supply. You're generating an energy source and you are being paid for that on a per unit calculation. So there'll be a VAT rate that will apply to that depending on where it's going and who the customer is. Obviously, if it's going straight back into the grid, you'd expect to have 20% VAT calculated on top of that as your income. The generation tariff is seen as effectively a grant. It's outside the scope of VAT. And the reason that phrase crops up, outside the scope, is because VAT is about taxes on business transactions. So if an income stream is outside the scope of VAT, it's meaning effectively it's a non-business activity. It's a grant-funded activity. So there's these liabilities and identifying them. And I would just say, in terms of any of you who are looking at these projects in terms of wind generation, again, a practical problem we come across is the fact that a lot of these transactions will be self-billed, so that the actual person who's buying the electricity off you is going to be the person who is sending you the information as to what your income is. And this has often been an area of problem in the accounts payable side, because they'll get a piece of paper from what they perceive as a supplier, but it's actually telling them what their income and what their VAT liability is. And therefore, that is information that should be coded as income and not treated as expenditure. So self-billing is a practical accounting process that just needs to make sure we've got some good compliance set around that. Mike, any new aspects from climate change or aggregates on this?
Well, not from CCL point of view. I mean, again, it's a renewable source. All of these are RSE, renewable source energy, but that exemption disappeared in 2015, or 2015 to 2018, but it's not there now. There's some questions have come in. There's on the VAT side, which I wonder if Daniel was asked one about wind energy, which in the place of supply, which I think Liz might have just addressed. Regarding wind energy, are the VAT rules applicable for both onshore and offshore? Well, yes, I think you've already mentioned. Yes. What is the definition of the UK for VAT? Includes anything up to 12 miles offshore. If it's further than that, then it's going to be outside the scope of VAT. But it depends on what the supply is. This could get complicated, because if you're talking about maintenance, for instance, the service of maintaining that kind of asset outside of the UK, yeah, you may, for instance, have a UK resident contractor that is your customer, even though you're maintaining wind turbines offshore and outside the 12-mile limit. There will be a process to go through there to work out what you're doing, what the place of supply is, who your customer is, and whether you have to charge VAT on it. A couple more questions coming in now, probably a bit more than we can address straight away here. Can we pick those up at the end? Are you happy with that? If you see them, Liz, they're quite lengthy to get round. If we get the end, we'll have time to pick these up, I think.
Yeah, okay. So anything new from you, Mike, on
CCL? Nope, as it is. Ags levy. Yes, I mean, coming back to the definition of what is caught by Ags levy, anyone who uses material for a construction purpose, where that happens is subject to Ags levy. So if someone is building wind turbines, for instance, or underwater hydro, for instance, within the 12-mile limit, then using local sourced sand and aggregate, even from the seabed, is all going to attract Ags levy, because it will be seen to be kind of using that material for construction purposes and get caught. So HMRC might not be doing local visits to work out how much is there, but there's an obligation on the developer and indeed the landowner to make sure that that's picked up and declared. So yeah, no, that's all I had to say on solar wind, Liz.
I suppose in terms of nuclear and small reactors, you can see that the theme of the issues run across. So I'm not going to delve into everything in great detail. Obviously, nuclear projects tend to have much longer lead-in times. Same issues in terms of how they're delivered, consortiums, MIMS, you know, overseas invest, all that sort of thing in terms of identifying what's the VAT structure that's most efficient. The only other new point that I've put up on there, because obviously these are quite major projects, is the implications about the developer self-supply, which is a change in the VAT way in which construction services are to be accounted for. That's come into force from the 1st of March of last year, 2021. And effectively what it does, it makes the customer the person who accounts for VAT. It was brought in order to negate what was perceived as risk of fraud from subcontractors primarily, raising invoices, charging the main contractor VAT, main contractor pays that VAT over, and unfortunately the subcontractor in receipt of that cash never declares it to the revenue. So it's that sort of risk, and you can debate as to whether that's a real risk or a perceived risk, but for whatever reason it was felt to be a risk, and from the 1st of March, after much delay it has to be said, the domestic reverse charges come into play. So that is taking a while to settle down, but hopefully most of you should be familiar with that. So that's the only new point to bring into bear. Anything new from you on the aggregates or climate change, Mike?
ECL, same message. Nuclear, small nuclear is not renewable under the strictest definition of the term, but it is low carbon, or even carbon free. But regardless of that, there is no CCL relief currently for it. Ags levy, well, again, we're talking about the same kind of issues here as with the kind of dockside development and other major infrastructure works. In that there will be a lot of material being moved around these enormous sites and brought into these sites, maybe from underwater, maybe from offshore, maybe from other land established quarries. But within the site themselves, these sites are so large, it is likely, I would say, and in my experience, it does happen that what seems like an environmentally good thing to do by sourcing useful aggregate material within a development site and using it on that development site rather than sending it to landfill or shipping it off site, that's a good thing to do, and it's environmentally friendly in inverted commas. But if you do that, and if you move it across the site and use it to build a bund, use it to build foundations, then actually you're still going to get caught by Ags levy, and the people who could be liable for that would be either the actual developer who is contracted to do that work, or the site owner, because there is this joint and several liability between both of them. So it's initially going to be the person who uses that material for a construction purpose. But if they're not immediately accessible, HMRC can and will seek the tax from the site owner. So with that kind of exposure, it's important to look at contracts. It's important to look at how that potential liability is addressed between the parties. It might not dissuade HMRC from pursuing the other joint several partner, but it might at least allow the kind of commercially the legal arrangements to make sure that the liability goes in the right direction after HMRC has secured the tax. Yes, so installation costs, one of the few positive things that came out of
this is one I've seen a lot of in the housing association sector, where we're dealing with particularly on retrofit of insulation, as I say, post the Grenfell tragedy, apart from any other spur in terms of energy efficiencies. I think there was a bit of a missed opportunity, and I'll explain why. But just to give you the basics, we had certain restrictions in terms of being able to access the reduced rate. And those have been removed now, so that we can access a zero rate. This is intended to come in from the 1st of April now until the 31st of March 2027. So we've got this sort of 5-year window of change. I think it'd be an interesting political debate as to whether he then removes it at the end of that period of time and brings back a reduced rate on these supplies. So as well as seeing the inclusion of turbines, wind and water, we've seen these removal of the eligible criteria conditions, which is certainly helpful to us in terms of opening up zero rating for a wider area. We're still talking about residential. So that hasn't sort of gone away, and we're still talking about supply and installation, not materials only. The conditions that did exist, which related to the defining of a qualifying person by reason of them being over age 60 or on certain benefits, or of it being a housing association, or of the 60% rule, those still do apply in Northern Ireland. So that's, as I say, an odd quirk of this, which is an issue as a result of the departure from the single market. But there's certainly good news in here. And as I say, I'm highlighting this in the context of our VAT sensitive clients. So housing associations, private landlords, NHS bodies, government departments, care homes, charities involved in either buildings which are dwellings or buildings which qualify as relevant residential purpose use. So that's where your student blocks come into play. So, you know, insulation works around student accommodation, care homes, those things. The NHS rules, and I know there's a number of people on the call from the NHS, the NHS rules are even more pernickety because they do allow certain services that are bought in to have the VAT recovered on those, but they are a specific list of services. They're called the contracted out service rules, and these equally apply to government departments. So they're called the Section 41 bodies. So, you know, government departments, wherever they are in the UK, Wales or whatever, will have these restrictions on what they can and can't recover to these lists of specific contracted out services. And these very much look at that being recoverable when they're non-structural works, works of repair. Even replacement works can be blocked from recovery because they're not seen as repair. So, you know, the replacement of wall cladding is replacement, it's not repair. So, you know, it's quite complicated for those of you who operate around and in the NHS. For those of you who are listening who are from the council side, you've got full VAT recovery unless there's some issues around perhaps your leisure activities, which cause a problem at the moment. But you on the other end of the scale of what we call Section 33 status in VAT law, which means you can basically recover VAT on your costs, whether they relate to non-business activities or even exempt business activities under certain limits. So what was the opportunity that was missed? And I think this is important as a good takeaway from this session today, if you're not already aware of it. When we're dealing with build contracts, reinstatement works, retrofit, there may be that there is an element of works in there which qualify for this new zero rate. They used to qualify for the reduced rate, but they come as part of a wider package. So, for example, external wall installation, you might be going, well, that's good. That's obviously a reduced rate and now a zero rate area. But that work might involve changing the pitch of the roof because of the extension of the width of the wall. It might require drainage goods to be changed, the aperture of windows or new windows to be inserted. So from the VAT perspective, what you've got is a single contract which has got a mixed supply. Now, what the VAT legislation did not and still does not allow is for those energy savings qualifying works to be extracted and qualify for the zero rate. Even though you can identify what they are, you can't apportion them. And I've had a meeting with HM Treasury at the end of the spring statement last Wednesday, and I've emailed them again now I've seen the legislation, just to sort of ask them, you know, did you not think about doing this? I put it politely, but, you know, have you considered that there was an opportunity, particularly when you're looking at social housing and the need to address fuel poverty? So we'll see what comes out of that, but do be careful. don't make the assumption that you can pro-rata a contract in terms of its different VAT liabilities when you're talking about energy saving materials being part of the mix. There are other situations which involve construction works where you can allocate different VAT rates, but not in reference to energy saving materials and their installation. So that is a really important point to take away. Mike, we're conscious of time. Is there anything that you pick up out on the adaptation side?
Well, yes, I would really, because it does cover the points I've made earlier on, except for the fact that now for adaptation and resilience, we'll be seeing an awful lot, hopefully, of development to help avoid coastal flooding, waterway flooding, managing waterways and so on. And this will, frankly, bring about lots of could bring about a lot of issues around what is taxable and what isn't. So, for instance, a flood defence, constructing a flood defence, is specifically taxable for aggregate levy, but beach replenishment is not. Building a bund is considered to be a construction activity, and therefore is caught. The material going into it is caught by aggregate levy. But depositing aggregate material on land without any particular expressed purpose is not. So when you look at all the kind of work that's going to have to be done on the coasts and also in managing water courses, draining perhaps or creating possibly coastal wetlands and other areas for increased volumes of water to gather, the material coming out of that is going to be full on kind of in the target for AGS levy. So yeah, the more adaptation resilience we invest in, I think the more likely HMRC and HM Treasury will be clawing back some of that investment in the form of tax.
'Twas ever thus, wasn't it?
It was ever thus, yeah.
Just to quickly finish on electric vehicles, as I say, as a car owner myself, Evie, please can we have some more charging points around the countryside? That would be a great help. But again, we've got issues here, and this is in terms of both the liability, but also in terms of businesses and organisations being able to recover that VAT. VAT on electricity charging points is charged at 20% VAT. There's no reduced rate, because the reduced rate is about a supply of electricity to an individual in a domestic context, and it doesn't qualify in that regard. And then on the other side of the coin, you've got to look at, well, what's the business's position in terms of being able to recover that? And there was guidance issued last year and again updated in January. So the revenue is looking at this area. But there are certain restrictions. For example, you charge your electric vehicle at home, it might be used for business purposes, but you're not entitled, the business is not entitled to use that for VAT recovery purposes unless you're a sole proprietor or a partner. So all of these aspects really need to come into play when you're thinking about any scheme which deals with energy, achieving that net carbon zero agenda in your organisation. So, Sue, I'm conscious of time. There's a couple of points on there. We could do a separate section on sequestration and carbon and offsetting.
I mean, it's up to you. We've got a couple of minutes left. So if you wanted to, I mean, we've still got 2 questions left in the chat.
Yeah, let me just have a look at those. So I think we've covered off on the point that Daniel had raised.
Yes.
In terms of solar panels, Reese, you're in a housing association and you're clients of ours, so you have a VAT helpline with us. So I'd encourage you to sort of talk to your internal finance team and have a chat with us via that. But yeah, it is important. The sole beneficiary of the generator is the tenant. If it's a genuine free supply to them, then what you're looking at is, well, what's the position in terms of the VAT that you're going to be charged on the costs? So you would have been hoping now that you would be looking at the new reliefs in terms of from the 1st of April, and you'd be accessing the zero rate. But obviously this might depend on whether it's part of a single scheme in terms of putting it in, or whether you've got other things going on in there. Heather's question is in the more complex area of NHS VAT recovery rules. So I think that you've got some what they call banding criteria that you can use in terms of identifying VAT recovery on a project, but that's very much dependent on what the building is, whether you're generating income from it, is it internal use. So you need to take specialist advice on that because of the special contracted out service rules. But you can find that information free, Heather. If you go to the government HMRC website, if you look at the references VAT GPB, VAT public bodies, if you look at business brief 10430, so it's internal manuals, it's VAT GBP 10430, you might find some useful guidance in there for you, but it's not without its complexities, Heather. Anybody got anything else? All quiet on the Western Front.
Yeah, I think you've
killed them,
blown them away with all that information.
Yeah.
If there is, I mean, if there's anything that anybody wants to ask offline, either contact Liz or Mike direct, or you can send the question to me and I can pass it on. I'll send you a link to the recording and the PDF slides this afternoon. And that's it, I think. So if there's no further questions.
No. And as I say, what the intention was is just to give you a flavour. It's quite broad, a lot of information in there, but it's just, we just felt it's not getting high enough up the agenda, and it needs to be considered earlier. So yeah, happy to help anytime.
There you go. Reece is going to contact his finance team to try and answer a few more questions.
Yeah,
So.
Yeah, you've got a direct link. And we're as a business perspective, we're very interested ourselves at Centurion in what's happening at the Hinkley Point, for example. So I'm not sure if any of the people listening to this call are involved in that project, but this is a good example of where we think issues should be being considered early on in those projects, or the similar ones that will go on in North Wales. So yeah,
all the barrages and everything else, and the hydro, which is it's crying shame that we didn't have the barrage in the Severn when they first started talking about it. We were going to mention that, I know, but if only, hey, if only. But yeah, hopefully some of those will get the go ahead now, and yeah, I'd like to make them efficient if we can for indirect tax point of view.
Yeah. So thanks for the time, Sue.
Thank you.
Yes, thanks very much. Thanks everyone.
Interesting and informative presentation, and thank you everybody for joining us today. Have a good afternoon.
Have a good one.
Thank you.
Thanks.